Okay, hello everyone and welcome to this intraday strategy webinar in SB Trade Desk. Today's February 18th and I'm Michael Boutros, currency strategist here with you today. Good morning, guys. We do have data on tap in just a few seconds. Here's what it looks like. In about 40 seconds, we're looking for the housing starts from the United States as well as PPI prints here on tap. As always, feel free to throw out any questions, trade setups you guys may be looking at. Be more than happy to review those for you as we go through the session. Lubna, Leon, Lee, Eileen, Dale, great to see everyone here in the room. So just about 20 seconds left. We'll go ahead and bring some of the dollar crosses into focus here. I've been watching the sterling very closely, as you saw on yesterday's setup. So we'll see what the impact has on the dollar, but here we go. 5 seconds out. Again, looking for housing starts and building permits. Survey says... Okay, 2.5 on housing starts, negative 2.0, on housing starts. Building permits also miss across the board. So pretty much a miss across the board on PPI and housing starts here, guys. We're looking for a print of negative 1.7, came in at negative 2. Nice upward revision for the previous month. So you might not see price action really respond to the print on the fact that we're a little bit mixed here on the read. Building permits also slightly missed expectations here. We're looking for a gain of 0.9, got a negative 0.7 print, but again, upward revision for the previous month. So the upward revisions have been sort of the game here that we've been playing on the U.S. data front at least. Even when the data misses, you get that upward revision, which sort of curbs the bearish sentiment. So now that we've got that out of the way, good to be here with you guys. Let's go ahead and jump into the featured setups on the intraday page. So a quick reminder, guys, for anyone who's new to the service, we've been getting a lot of sign-ons. Remember that you need to click on the SB Squawk sign-up form, guys, to sign up for the Twitter handle for the SB Squawk service. You need to submit this form as well as a request through Twitter. So just remember, you have 2 steps there to complete the SB Squawk sign-up. Also, a quick note here, guys, for those of you who are on the intraday trades, I did add an opening range description here on the resources page, a quick example of last week's Aussie dollar opening range, and a quick breakdown of that strategy for your consideration as well. By the way, there'll be a lot more stuff coming onto that resource page, guys. We are in the final works here to get things up and running, so we will have more information and more resources for you on that page. Okay, so British pound. So, as we highlighted yesterday, the opening range for the week is still in focus. Now, it's been a little bit of a tricky play here for the British pound. I will admit that, but nonetheless, here's the formation that we're trading in. First of all, let me show you the daily chart. So, the basic premise here is this, guys. We broke above this region here on Thursday of last week. That was 153.20. It was the gap that we made from the January 2nd close. And it was also a nice longer-term trendline support here that dates all the way back to 2009. Former support, acted as resistance, and here we are plowing through. So, in fact, we opened up the week with a constructive outlook on the pound. As we opened up Sunday trade, failure to break above that region, near-term resistance, saw a nice trigger break here in momentum, okay, and took this thing right into a key support structure. You can see we highlighted this region earlier in the week, just above the lower median line parallel, and just below the 236 retracement of the advance off of the February lows. Okay, so the region in focus here is going to be 154.40 into 153.20. I know it's a larger region, but the ATR has been rather wide here for the sterling as well, so we do have the room to play. A beautiful opportunity to take a long exposure here last night. Not only did you get this trigger break in momentum, but it was a clear break of the Asia Pac opening range, which came just above support. So an ideal scenario here to get long initial targets, obviously the opening range high. You're playing within this range until we break out. Inevitably, looks like my charts want to freeze on me, guys, so just give me a second. Inevitably, we would be favoring a topside break of this. Okay, you got the UK data earlier today, which was pretty strong across the board. Unemployment, ILO, we're looking for a print of 5.8, came in at 5.7. The claimant count right at 2.5. Another thing that we've been paying closer attention to is the average weekly earnings. And remember, the inflation picture has been rather soft from the UK, but If you look at that last report, guys, and you strip out energy prices, which have obviously been very soft, there is some underlying growth in core CPI. Okay, and that's only going to hasten the BOE's outlook for rates. Add to that if you look at the average hourly earnings today, up 2.1% versus the 1.7 we expected, and even an upward revision to the previous hourly average, or average weekly earnings rather, does show that we're also getting some growth in earnings as well. So the picture from a fundamental view starting to become a little bit more constructive here, is the BOE is going to have to look to move on rates sooner rather than later. Saw the trigger, but event risk, says Jay Jackson. Yeah, on a trade like this, I don't blame you. The one thing I want to say on this, Jay, is even if you have event risk to trade, even if you have event risk coming on tap, with the trade at such a critical region, you had the median line parallel, you had a clear-cut opening range low for the week. Even on event risk coming into play, a trade like that I would still be very interested to play. Obviously, this is 3:30 in the morning, so I didn't get an opportunity to get in it. This is something we'd still be very interested in. The only thing, Jay, is you just trade with lower leverage, man. So because event risk is on tap doesn't mean you want to completely stay out of the trade if there's a compelling trigger. It just means that maybe you want to trade half your leverage side or a quarter of your leverage size on that position. Does that make sense, Jay? As opposed to staying out the trade completely, you might be better off just to lower the amount of leverage on that position. Jay says, okay, thanks. Yes, gotcha. Eileen says, good morning, Michael. Glad to have you back and hope you had a wonderful time out. Thank you, Eileen. It's good to be back in the swing of things. Mark Lavender, great to see you as well. Chintan, we'll take a look at the sterling crosses. I guess we can do that right now. Listen, Chintan is asking about sterling Kiwi and sterling Oz. I'm not really a fan of sterling Oz per se right now, sterling Oz as much as I am on sterling Ki. So we'll take a look at that in a moment. Before I do, is there any questions here on the sterling? The opening range is very well defined at this point. A break above 154.38 has us looking for 154.66, 154.73, this region here. Ultimately, you'll be looking for a stretch into 155.30, okay, and that median line if we do break the weekly opening range high. All right. If you took this long last night on that trigger, I would be out a quarter or a half to 3/4 of the position here while we're inside the range. Again, stops at break even and see if you can get that pop into 154.70 or so. Keep in mind, the opening range high, or the major resistance here, 154.70, is a 236 also from the July decline and the December lows. Okay, so you're looking at the 2014 lows, you're looking at a 236 retracement. Just above that, you're looking also at the median line off the lows here for the year. So really clear-cut targets. 53.20 is going to be the bullish invalidation level. Okay, so a break below that, you really start to look to play the recovery back to the downside. All right, so that is the British pound. Sorry about that. From yesterday's setup. Okay, moving right along. As far as the sterling crosses for you here, Chintan, here, let's take a quick look. So sterling Oz, I'm just not really liking where it's at right now. It's getting kind of sloppy. It was holding so well within the confines of this ascending median line formation. You got that false break. Turned my focus to the downside, to be quite frank with you guys. You got a nice 70 hold there in momentum. But here we are with a nice reversal candle here. If we push through 98.12, 98.20, yesterday's highs, it would be an outside reversal. So I'm going to sit tight on this one because I do think that the sterling can move higher and the Aussie. So you could get some chop here sideways, Chintan. My preferred trade, if you're really looking to get into a sterling cross, would be sterling Ki. Okay, let me show you real quick what the daily chart's doing here. All right, so here's the daily chart of sterling Ki, and certainly the support that we came into yesterday, huge, huge. Okay, I'll bring your attention to the close highs that we made for January of 2015. Okay, it's literally the stretch low we made yesterday. I'll bring your attention to a 618 extension from the ascent, off the 2013 low, a nice pivot in price. A basic 618 retracement of the decline. I'm not going to stress that too much. But, guys, the February opening range low came right into the top of this support barrier. Okay, so you have some clear-cut support at this region. Momentum was right at 40. Okay, you're still within the confines, Chintan, of the monthly opening range. So I'm not going to make any snap decisions here, but on the relative performance of the Kiwi dollar and the sterling dollar, I do think you want to be looking higher. Here's what the sterling key looks like intraday. All right, so here's the start of the week. Here's your Sunday open. You haven't had an opening range low yet. It's been a one straight shot down since the Sunday open. This is your first rebound. Momentum divergence into that low has been going on for a couple of days. Okay, and if you take the high from price action, you had a beautiful trigger that also gave out on that rebound. Okay. Again, here's that key support barrier that we just talked about. In fact, if you take this on a near-term approach, okay, here's a pitchfork off the lows that you made in November and using that definitive low that you made here early in January, okay, look where that median line comes in. Right at the lows there, right at the lows. So with the turnaround that you saw in momentum, the divergence into the lows followed by the trigger break at support, this is going to be a trade I'll take 9 times out of 10. Again, most of these positions, guys, have been panning out in European hours. So if you're trading on the European time zone, you have the cream of the crop. Okay, look for these setups early in the week, specifically as you get into the opening range breaks. They've been all panning out during European trade. You know, you got to trade what the market gives you. So another opportunity here with a break, a clear-cut break. Here's the Asia Pac opening range high. You get a break of the highs, you're bullish against the lows. That was, again, accompanied with a trigger break in momentum after divergence. 9 times out of 10, those will be favored setups. So near term, what are we looking for as far as the scalp targets? Let's take a quick on-the-fly approach here. Let's see if we can map out some levels. Basic retracement off the high here. Just want to see if we're getting any reaction to these levels. Okay, I'm going to go ahead and highlight the opening range high for the week. Don't want to ignore that. Comes just above that 618. So it's a little bit of a range of resistance here, guys. But remember, a quarter of the daily ATR on this pair is still about 70 pips. Okay, so if our support ranges and resistance ranges are a little bit bigger, you know, that makes sense with the current volatility that we're seeing here. And bear with me one moment, guys. I just want to see if this extension pans out to anything. Ooh-wee. Looks like we just missed it. Okay. 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 So the 100 off the high would come in at 202.70. Okay, to the downside, it's just above that 236. So we're going to keep that region as the near-term major support here. Even if we get a break of the weekly opening range low, just as a disclaimer, I wouldn't be interested in necessarily playing the short side, guys, until this gives out. Base case scenario, again, based on the relative performance that we're seeing, I do like the pair higher. But we have to always be mindful, guys, and this is something I get a lot of questions on. You know, why do you spend so much time stressing the invalidation levels? Why don't you just go with the directional bias that you're playing? Because it's very important, guys, to know at what point we're no longer looking for that bias. Meaning, at one point, if this price is compromised, are we going to stop looking for long triggers, 40 holds, and momentum and such? So for me, that region is going to be 202.70 to 202.90 here. That being said, still going to favor buying bounces, long triggers in momentum. So maybe a pullback into 204, test these lows again, gives you a nice long opportunity. Broader story stays constructive here while above the opening range low for the week. So I hope that helps on this one. Who's that? Premendra who's asking about that? Or Chintan. I like the levels. I like the broader picture of where Sterling Key is on the daily chart. But right from these levels, you either want to wait for a pullback or a nice trigger to get back on the long side here before you try running into that one. Chintan says, oh, yes, I'm in the Sterling Key. 80, I think you mean pips at the moment. Nice job. Well done. Remember, 70 pips is about a quarter of daily TR. So as per the strategy, you want to be making sure that you're taking some off the table and bringing in your stops at this region. Jay Jackson says, my weekend screening, mostly looking for trends, overlooked pound Kiwi. What kind of screening would have picked this up? Jay Jackson, it's all about positioning, where the position was as we closed out last week. I mean, if you go back to the Kiwi chart on the daily, well, I guess before we even came into this week, we were already kind of really wishy-washy here on that outside day that we made the previous day, or I guess it wasn't quite an outside day, but a reversal candle after we pushed again off that 88.6. So I really didn't have anything into this. Honestly, Jay, into the weekend, my man, I wouldn't have been looking at this. This came into my attention as we closed out yesterday's trade right here. While you trade within this mess, that's nothing I'm interested in. You know what I mean, Jay? It's the breakdown here that tested the opening range low. Now you're next to an extreme again. So that's why it comes back into focus as a near-term prospect. Jay, does that make sense? I mean, since the start of the week, this thing has been a chop fest. Even if you look at the scalp, last week's was very difficult. I mean, you initially got like a Sunday opening range break here, which quickly fizzled out. You went through the highs for the opening range. That didn't pan out. And you pretty much almost closed the week unchanged. I mean, a little bit lower. So, you know, that's not going to be something I'm interested in. But to open up this week, it's that extreme in price near either major support, major resistance, monthly high, monthly low. You know, these are what bring them to my attention. So Jay says, yes, thanks, extreme pricing. Right on. I want to put along on the gold, considering tight stop. What are you going to consider? So Chintan, we can take a quick break here and take a look at the commodities. Here's what the gold setup looked like from last night. I highlighted it. In fact, I just did an interview with Kitco on this last night. You know, his question to me was, you know, what do we look for with gold here on this break of support, and how strong is the 1200 barrier was his question. Listen, it's not the time right now to get excessively bearish on gold. That time was last week. We noted that with the break below 1248, 1250. If you guys recall, heading into the weekend, that was the bearish invalidation level. 1218 was the bullish. So you got that 1218 break. Initial targets at 12.6 hit pretty quick, but the major support is still not down until 1195 into 1197. And that's a nice confluence. Again, my favorite plays, guys, 618 off the high, 1618 off the high, 618 off the low. And you also have the trendline support, basic trendline support off the November lows there as well. So here's what gold looks like right now. I would be looking to get onto the long side of the trade, Chintan, if we get this drop here into this region. Okay, I think that would be a really nice position. In fact, if you also look at the momentum signature, okay, since the break in the low that we made, we saw a 40 rebound here, or ahead of 40, another ahead of 40 rebound. You know, you could get this drop right into 40. Price drops right into 1195. You look for that top side trigger to give out, and then you would attack the long side. Now, initially, even on that type of play, guys, it's just near term. This has a bearish consideration for the month so far. If you count this as the monthly opening range, that's the break, puts you bearish. If you count this as the monthly opening range, that's the break, counts you bearish. Either way you look at it, okay? First 50 break, or first break sub 50 since January, right, or since December, rather. So I think before you start to take a long, Chintan, and try to fight this, my man, I would be looking for a little bit more of a conviction turn in momentum. So I think you're on the right idea of trying to fade some of this weakness later this week. Listen, it could pan from here. 1206 is a huge region. If you guys remember, 1206 was the low day close for the last day of 2013 trade. Okay, December of 2013, December 31st. I remember it precisely. And has been a major pivot in price. Okay, in fact, I'm going to take a quick segue here, guys, and show you a chart of gold on a weekly standpoint. This is the chart that was published with the quarterly forecasts for daily FX. Unless it's gone. Oh, I'm sorry. Oh, here it is. Okay, here it is. This is the weekly chart, right? Oh, by the way, Chintan says 1195 is the monthly S1 pivot too. Excellent. Always good to add further conviction. Guys, you know I'm not really too big on pivots, but when these pivots land on major key support regions, major key fibs, highs and lows, monthly, weekly opening ranges, then they put a lot more emphasis on it. So, Chintan, thanks for that. But bringing back into focus, you know, the monthly chart, 1236, just to show you some of the things that you hear me and Jamie talk about a lot: low week closes, high week closes, low day closes, high day closes. Here's the low week close, okay, for the decline off of that 2011 record high, and you can see what kind of pivot that's been offering at 1236. We're now below that. Okay, so just like this is showing here on the weekly chart, so is the daily chart closing below or pushing and testing right now the low day close from 2013. So I'd like to see a stretch here, to answer your question bluntly, Chintan. I'd like to see a stretch here into this region. That's where I'd be interested in possibly trying to test the highs. Right now, I feel like we'd just be trying to press, you know, trying to fight the trend to the downside. Does that make sense, Chintan? Also, a quick segue, the U.S. dollar index. You know, here's the Dow Jones FXCM dollar index. We've been looking at this since the start of the month. We're still in that super tight opening range, just below resistance. So you can see a scenario, Chintan, where this thing may gives you a little bit of a rebound here, maybe test the highs again, presses gold into that low, and then the break to the downside would be our, you know, signal to try to play gold higher. Again, I'm not saying that just purely based on the gold-dollar relation, but more so just relative pricing for each of the of their respective trades. Chintan says, yes, sir, cheers. All right. So quick picture there on what the gold picture setup looks like. Looking lower, sub 1218. Bullish invalidation 1195. Bearish invalidation at last week's swing high that we made on Thursday there, or excuse me, the swing high that we made. I guess it was Thursday on the 11th, 1238, 1240. That's the bearish near-term invalidation that would have us looking for that move into 1250. All right. Questions on gold before we move on? All right. Sorry about that, guys. Again, my charts want to think. But let's jump back into how cold was it in Vermont. Dale was asking. Pretty darn cold, let me tell you. Epic skiing conditions. For those of you who are avid skiers, epic skiing conditions. I mean, I haven't seen conditions like that in years. But Lubna saying, what about the FOMC? So we'll definitely take a look at the dollar. Again, for the FOMC, Lubna, you're going to want to look at that dollar index. And if it prompts a break of that lower median line parallel, that's when I think we can start to reaffirm a correction scenario here for the dollar. I mean, anyone who's been trying to fight that dollar strength just hasn't gotten the pullback just yet. So we will review the scenarios for that as well. The other thing I just want to go over real quick, guys, before we move into extraneous trades, it was yesterday's Aussie dollar setup. And here's what that update looked like last night. So on its face value, very clean opening range break. Okay, the range that we came into the week was 77, basically 77.85 and 77.90. The support was right at the gap. Sunday, here's the Friday's close. We gapped higher on Sunday. We filled that gap here with the move lower, okay, on Monday. And this breaks or shows a move breaking the initial weekly opening range high, giving us a long side bias. You also had a clean break in momentum, shifted the focus higher. Now, one thing I do want to note, and something I tried to add in that resource page yesterday for you guys on the opening ranges, is how long do we keep that bias in play? If the opening range for the week breaks up, how long do I continue to buy in the dips? How long do I continue to buy breaks of resistance? It's not on a length of time, guys, but as long as the momentum profile remains constructive. And what do I mean by that? Well, as he came into resistance here, remember, nothing supersedes basic support and resistance, right? Doesn't matter if it's a fib, doesn't matter if it's an opening range break. If an opening range breaks just below resistance, you still have to be mindful of that resistance. So what I wanted to point out yesterday was this median line parallel right here off of the late January highs. Okay, if you take the formation that we've been in for the last 3 weeks before the break that we made here this week, we even checked that upper median line parallel as support, rebounded off. If you take that same parallel and extend it off the highs from January, it's coming right into this region here as well. Okay, so long story short, we are looking for long triggers well above this region. This is the opening range high. We broke. We're testing the opening range high. We're testing the opening range high. We're looking for long triggers, but at the end of the day, guys, you want to be mindful, even if you take a long trigger here, guys, you want to be mindful getting into 78.20. That's the break that really sets this thing off. You look for 78.25, 78.50 on such a stretch. Okay? A break below 77.86 puts us neutral. It doesn't necessarily mean you're bearish. You'd need to break the weekly opening range low for that to happen. All right, so here's some triggers for your consideration. One I'd be looking at. These are shorter term trigger just off the highs that you made on that last stretch. Okay, nice 40 hold in momentum so far. Remember, we're just putting in the U.S. opening range right now. So the U.S. opening range high, or the U.S. opening range low seems to be set right here at 77.84, just below support. And we'll see what the opening range high. So far, the opening range high is right at the 78 handle. Okay, so if we head into 9:30, you see a topside break. Again, you're looking for this region here. And that's really what would set off the long side. A break below 77.80, or basically the opening range low, you'd look for a run into the weekly opening range low or that gap fill. And again, that's down at 77.46. All right. Questions on the Aussie? I think you could get a nice move here on FOMC as well for this pair specifically. If the opening range break for the week, for the day, for the session here breaks to the upside, depending on where the trade is, if you're trading anywhere near this region, you get a weaker dollar setup. You look to play to the upside. But remember, this is just the minutes, guys. There's nothing new that we're going to see here. We're just a little bit more clarity, a little bit more color on where the FOMC stands as it pertains to rates. So here's the trigger on the 5-minute that you'd want to be considering. Okay? And a topside break through this and a push through the opening range high for a U.S. trade puts us on the constructive approach heading into this session. Questions on Aussie? Still pretty clean setup here. Play those levels and let's see if we can get a break to the upside for a little bit more of a strong recovery. Here's what the daily chart looks like, by the way, for the Aus. The one thing I do want to note, and something I put on the report or on the intraday page earlier in the week, is this. You know, the opening range high for the month, guys, comes in at 78.75. Look where that lower median, or the median line parallel off the October 2013 ML. Look where that comes into play. Right around that same region. Right around that same region. So that's the focus, at least for me. See if we can get a tag of this median line. See if we can get a tag of the opening range high for the month. And that's really the region that would set us off for a little bit more of an extended upside play. Daily momentum, still sub 40. So you can envision a scenario where you push through the opening range, momentum makes it through 40, opens up the correction for a larger run into 79.40 or so. All right, so that is the Aussie dollar on the near term. Pretty clean setup since the start of the week. All right, so those are the featured trades that were on the intraday trade on SB. I want to go ahead and take your questions now. Let me know if you have any specific trades you guys are looking at. Some popular trades I've been hearing or I've been getting tweeted at. Obviously, the dollar CAD. I know the swing trades took a stab at that one. Here's what the CAD looks like to me, guys, at least in the near term. Oh, Stefan will definitely take a look at sterling yen. I think that's another brilliant play. Just panning out right now, but I think that's something we'll keep focused on as we get into this week. Here's my focus on the dollar CAD, guys. Not quite as confident on this one, which is why I really haven't highlighted it on the intraday page. But as far as the way I'm approaching it, let's just say this is we're still within the monthly opening range. Okay, we still haven't done any damage to that yet. We need to see technical damage below 2350 to get that going. Even in that scenario, 2280 is a major region I'm looking at. Here's a 786 retracement. This is from the decline off the highs that you made in 2009. Here's a 236 retracement. This is just from the ascent off the lows that you made in 2004. And I know it might be light for you to see at home, guys, but if you look at this larger formation that we've been trading within, excuse me, from 2009, support, right? And then there's the rip that took you right through support. That median line, bisector, comes in just below that 236. So for short exposure, that's really, for me, the target. To be able to validate a major turnaround in the trade, I bet you if you tack on a quick extension off the high here, okay. I'm sorry, guys. I like to be precise. Okay, look where that 100% extension comes in. Right on, right? Right on. So I think, I'm just not sure the trade is there yet, guys. But the downside, that's the area of interest. On a break below, you play a much more aggressive target into 119.60. On a momentum conviction hold, specifically if you see a rebound along the 50 region like here, you would look to reassert the long side. Remember, the reason I'm so cautious on this is because it is a grand uptrend, okay? We always want to be cautious when we're trying to fight the trend. I'd be much more confident if this thing had come into a level of support and we were sort of looking to play the long side. Yeah, great. But at this point, trying to call the turn, I'm going to need to see some serious conviction on the turn here before I start to fight it. So that's just my personal take, guys. We're still within the opening range for the week. So if that breaks, look for that 2250 into basically into 2180, let's call it, as a major support barrier. Here's what the dollar CAD looks like on the intraday. And again, I don't have too many levels mapped out because I haven't been trading this personally. But this is what I kind of looked at last night. Whoops. Okay. So if this is legit and this is a break, that means our slope is off here on this pitchfork. All you're looking for is a run into the weekly opening range high, and that's basically at 2490 to the upside here. Momentum signature to me looked constructive. This break last night, guys, was really big. Okay, for a couple of different reasons. You had a basic momentum trigger here off the highs for the week. You had a former support trigger, which was obviously operative here on this break that took you below the initial opening range low for the week, right? And then both of those converged right on 50. Right on 50. So on a move like this, it's really concerning if we make it up, through the underbelly of it. Not only that, if you take a look at the opening range for Asia Pac, here it was right around 1900. That's the break of the Asia Pac opening range. That coincided with a break above 50 in momentum. So on a dollar CAD trade like this for a scalper like me near term, I really wouldn't have been interested in any type of long exposure any type of short exposure rather after this move. Now I would have been looking for short exposure as we headed into this, but guess what? There was nothing in momentum to suggest that we should be looking for a turnaround. So for me, I missed the long. Can't jump on a short yet. Gotta wait, see if we get back into the opening range high for the week. Okay, patience is really required when you're trying to trade these turns, guys. It often takes a couple of different stabs before you actually get the turn. So, just keep that in mind. Let's just see what a basic retracement off last week's high looks like. There we go. All right, 124.90 near-term resistance, opening range high, topside break. You look for 25.30 and 25.69. And as far as support, this is your opening range low and 786 extension. I'm not going to stress that 786 extension, but this is where I'd be looking, or this is where, at least in my personal opinion, where a short exposure into this range makes much more sense. Makes much more sense. Questions on the dollar CAD. I know it's been getting a lot of attention. We're going to get some sort of definitive break, guys. Until we do, please just be mindful of the monthly opening range. You know, it's a very strong trend to the upside. So before I start to jump on a short exposure, I think I need to see a little bit more of a turnaround here in momentum. All right, so that's dollar CAD. Stefan, sterling yen. So I've been kind of throwing tweets out on this trade just because I haven't necessarily been involved in it myself, but I think it's setting up really, really nicely. So the major resistance target we've been talking about since the start of the month is basically 83.96 into 84.20. You have the R1 monthly pivot right here. You have the long dated 50% retracement. This is from the decline off the highs that we made in 2008, if I'm not mistaken, 2007. Okay, there's that 50% retracement, real nice pivot in price. You got a basic 618 off the highs from last year at 84.25. And they're all stacked up in this region just into 84 essentially. So even more compelling than this is the near-term chart. Okay, and you can see, if I give this a little scale here, you can see how clean that looks. So again, the major region of resistance into 84 rather, is highlighted here. Keep in mind that you know, the monthly opening range high, last week's high, is exactly where we just topped out. This technically does constitute a break of the weekly opening range. Here's your weekly open. Sunday puts in a high. Monday puts in a high, rather. We break into a new low on Tuesday. We check the highs on Tuesday morning. It holds. We pull back. Here's the Wednesday crunch. Okay, so objectively, above 83.20, 83.25, you want to be looking higher here in the pound yen. Okay, there's a support trigger to take you out of the longs if you're holding any. And here is the support trigger that you would have used last night to get you on the long. Again, another scenario here where you had a pretty clean opening range for Asia Pac. The high was right at the opening range high for the week. You set a low right here at 82.60 essentially. Break of the Asia Pac opening range high. Or this is actually also a confluence break of the Asia Pac and European opening range high. Nice 60 break in momentum, putting you long here. Long story short, guys, for the sterling yen, near term, and I mean immediately heading into this session, your longs are at risk in this region. Okay, once we plow through, I'm all with you. Look for 85, look for 86, 85.90 would be a 764 retracement. Actually, that coincides very nicely with the median line parallel here over the next couple of hours. But this region, longs are at risk into this region. Once we plow through, again, we'll continue to favor that. But you want to be mindful of this major key resistance. A break sub 83.20 invalidates the long side. Doesn't necessarily put us short, but invalidates the long side. You'd need a break sub 81.60 to put us back on shorts. You know, I just really like the overall performance of this formation here and the reactions that you've seen along the median line, along the upper median line. A little bit of a straddle here, but again, as long as you stay above that median line, which is now in line with the weekly high, okay, you stay constructive on pound yen. Now, what's interesting is for the dollar yen, I think that could get a pullback. Adrius, I'm not sure I get where your question is here. What did the eclipse mean? Oh, I'm sorry. Are you talking about the sterling yen on the daily here? So guys, on all my charts, I will always try to highlight what, so yeah, I guess I should tell you guys. It's just a level of a level that we're looking for a reaction. And I guess the best example was last week's Aussie dollar scalp setup. So if you go to the scalp log from last week, here was the chart we're using at. We noted that after we broke the opening range low for the week, we put us bearish after 77.50, right? We were playing the short side. After we broke below 76.84, which was a pretty big level, we highlighted this region as the near-term bearish invalidation level. So last week, fortunately, as soon as this thing broke back above 76.84, we were completely out of the short side exposure. So for me, on my charts, guys, whenever you see an ellipse, whenever you see a shaded region of support, these are reaction levels that we're looking for, meaning a break above is going to keep that bias in play. Longs into that region are at risk. Do you know what I mean, Adrian? So for the sterling yen specifically, the question you're asking, that was highlighting that major key confluence of resistance. Meaning, longs into this region are at risk, and if this region breaks, all the more conviction to continue playing the upside. In such a scenario, guys, you want to tack on some levels here. Initially, we'll add the 764, and we'll go ahead and tack on the 88.6. So on a topside break, those are your targets right there. Adrius, makes sense? It says, gotcha. Circles on the sterling yen, yes. Okay, cool. Stefan says, thanks, man. More than appreciate that, Stefan, for sterling yen. Hope that'll offer some clarity, man. I think it's going to be a beautiful trade. And again, sterling yen, last 2 years running, has been my my trade of the year. So we'll see if we can continue to support that long side play in pound yen. Chintan wants to take a look at Kiwi yen, please. Sure. Chintan, let me see if I can. I don't think I can click on that link. Okay, so here's a chart that Chintan just sent over. This is what he's looking at for Kiwi yen.
Congratulations. You have been selected to take part in our anonymous survey.
Oh, that was from the website you just sent over. Chintan. But in any event, he's asking to see if this region here, 89.90, I guess into the 618, is that going to be a fake out or a break for the Kiwi yen? So here's what my chart looks like for Kiwi yen. And we have that same level highlighted. It's the 618. It's actually a lot more than just the 618. Former 100 off the high, 38.2 off the low from October. This is the formation I was looking at on yesterday's massive, massive candle and really affirmation of the break through the 200-day moving average here. Also, momentum. Okay, nice momentum trigger off the highs there. Just coming into focus. Actually, if we adjust it properly, it looks like you still have a little bit more room. Yeah, this is one I'm not really going to be interested to play, to be honest with you. Look, again, on its face value, this does look like the opening range break for the month, right? Here's your opening range low. The only high that you really set and defended was here. You came back the next day, you tried it. Even again on Friday, you tried it, and it held. Gap on the weekend open, push higher into major key resistance. It could be a false break. I don't know. All I know is that the momentum signature hasn't really cleared the bearish sentiment yet. You didn't get that 60 break. You didn't even get a 60 tag yet, so you could see another press into 90. But longs are at risk below this region for sure. I'm 100% with you on that one, Chintan. Is it a playable scalp? Let's see what the near-term chart looks like. Let's see what the near-term chart looks like. This actually looks extremely interesting now on the near-term chart. See yourself last week's low. If this matches up. Okay, so let's take a quick look at this one. So objectively, this does seem like a break of the weekly opening range. Highlight that right there. Here's your Sunday open. You gap into a Sunday low. Gap is filled. You press a high. You try to check the lows. You basically come into the gap that holds, and here's the plow through 89.25 soft target, which would put you on the long side of the trade. At this point, I'm mindful. Like I said, longs into 90 are at risk. Who asked this question? This is for Chintan. Longs into 90 are at risk. You know, even if you get a nice momentum trigger, I'd try to get a trigger as close to 89.25 as possible, because again, a break below that invalidates the opening range bias, and momentum being at 40 here. So if you get a topside trigger break, maybe price action makes another low here into this trendline support. You get some divergence in momentum followed by trigger break. 9 times out of 10, I'll be interested in taking that trade. But just be mindful here of that major key resistance. I mean, you could try to play the longs into this, guys, but this is pretty critical. If this breaks, I think we have clear rain to just be buying dips in Kiwi yen. I just have a hard time wrapping my head around a long Kiwi position, despite what's happening in the yen. So those are my reservations, Chintan, on Kiwi yen. I don't want to scare you out of the trade. If you're interested in taking it, I would just tell you that this is a pretty big region, and what the Kiwi's doing. In fact, I do believe that swing trades are looking for Kiwi shorts. I really wouldn't be too confident on trying to get a long position here. Here's what, by the way, dollar yen looks like near term. Did we go over this earlier, guys? So a little bit of a messy trade. Obviously, it's the abomination. We make fun of it all the time. But again, not really all that clear rain that this break we saw last week is the real deal for the continuation of the broader uptrend. In fact, on that rally, look what happened in momentum. Okay, that's a change in behavior. I hear Jamie say it all the time from a momentum standpoint. So I'm going to sit tight here on the yen. Obviously, guys, on the scalp intraday charts on SB, you've been seeing dollar yen for the last 3 weeks. This is the first week I've kind of left it off the, or I think the last 2 weeks I've left it off the page there, just because you really don't want to be a part of this, at least from my humble opinion, from a scalp perspective. You had beautiful plays in January, even into the end of January. There were some interesting plays, but with this move here, and I'm not completely convinced that we're moving in resumption. And at the same time, I can't get bearish or take a short unless we get back below 118.20, 118, which has been the bullish invalidation level, right? So I think it's a wait and see here, specifically with the momentum hold at 60. If we see a 50 break in momentum and you see price back below 118.20 here, I'd actually be very inclined to play the shorts again. So with that in mind, Kiwi yen might be a great short if this turns around and breaks and you see some yen strength in confluence with what we're expecting to see from the Kiwi itself versus the dollar. Does that make sense, Chintan? He says, I'm searching for shorts only because of risk trend considerations. Have to wait for more clarity. Thanks. Yeah, I think so, Chintan. On the Kiwi yen specifically, I do think so. Listen, it's a trade at major key resistance. So right off the bat, our focus is looking at this 90 region, looking against it. That's my personal focus. But for me to actually start to try to press a short on a trend that has been so strong, it would really take something a little bit more convincing as far as the momentum is concerned. All right. And Lubna wants to take a look at U.S. oil, and so we shall. Here's what the crude trade looks like. I actually did put out a chart on this last night on Twitter. Where is my... Guys, talk about opening ranges. Actually, today's webinar has been a great opening range sort of trading for you guys. So this is the February open. That's all I've got to say. That's all I've got to say. You set a low right first couple of days of the month. This is a 2-hour chart, by the way. The high came at a beautiful confluence of a 786 retracement and a 618 extension. Coming back to check the opening range low, it held. Coming back to check the opening range high, it held. Come back to check the opening range low, the median line starts to come into focus. Okay? And this still is in focus, meaning topside break above 54, ahead of that 58 target, 58, 65, 58. You want to be mindful of that median line. Okay? And within the weekly opening range, the monthly opening range, excuse me, if we do break below this median line, you actually do have a trade set up here to play it right into the opening range low for the month. So again, it's a range. Play the range as you see fit. The break of the range is going to give us the definitive bias for the medium-term outlook. That being said, you know, it's a beautiful range at 47 into 54. Very clear-cut triggers on the way down to the opening range low for the month. You saw a nice momentum break there. On the way up into the opening range high, this was actually a trigger I was very interested in. Okay, I would have wanted to play this into the opening range, into the median line. It just missed it by almost a whole dollar here, but you get the picture, right? 54, 47 is the market for crude. Play that range until we see a larger break. If you look at this on the daily chart, again, my baseline scenario is that you do inevitably see a topside breach above 54 for a little run either into this median line region here, which again, this over the next 2 days coincides with that 100 off the low, 236 off the high. Or again, like I said, if you get a break of this lower median line parallel, you do have a play into the opening range low for the month, and that's what would be the broader bullish invalidation level near term. Encouraging or discouraging the crude trade would be what we're seeing in dollar, guys. If the dollar finally shows correction, you know, I'd like to be a little bit more comfortable playing the bounce here in crude, even the bounce, a near-term bounce in gold, while I think that broader trade still is bearish. You know, I think that would be the scenario that would give us or add conviction to both of those trades. So back to the 2-hour, I think it's pretty clear. Lubna, does that make sense about oil? Let me know if that offers some clarity or if you have any questions on U.S. crude. Lubna says, yes, thanks. All right, more than welcome. All right, so those are the setups that I've been following, guys, and those are the setups that are featured on the intraday page. Do let me know if there are any other setups you guys are looking at you'd like to review before we close down the room here. I think we went through all the majors. Dollar CAD I wanted to talk about. We did that. Euro yen, another one that's very interesting. Yesterday did make a break of the weekly opening range. And just another example, guys, of how when these opening ranges for the week break, you don't want to be completely oblivious to resistance. Okay, just because the opening range breaks for the month or for the week, if there's major resistance or a technical feature above it, it does not, you know, it doesn't just disappear because the opening range gave out. So here's an example where the opening range for the week broke. You came right into the median line parallel, just missed what would have been the topside target. Again, I wasn't involved in this, but this would have been the topside target at 136.28. This is a nice 100 off the low. And then some divergence into the highs, break back below 16 momentum. You know, takes it off. At the end of the day, objectively speaking, heading into the U.S. session right now, you want to stay constructive above 35.50. Okay, you're looking for long triggers. You're looking for pullbacks to buy well above this region. Don't think you have any long triggers that are quite prepped just yet. That'd be really nice if it breaks above 52 for a long against the opening range low here for U.S. Looking for a tag. First, initially on this one, the median line, but ultimately that major key, 100% extension. Remember, guys, a much wider range scalp, 51 pips a quarter daily ATR, so there is room here to wait for the proper trigger. Bounce from here might give weakness to the Kiwi in general. Chintan, what trade are you talking about? Oh, I think you're talking about Aussie Kiwi. Okay, we'll look at that in a moment. Adria says, how soon will you be posting this video? Missed 40 minutes. Hope you enjoyed your birthday and trip. Adria, thank you so much. Guys, it usually takes about an hour for the video to render and then another 20 minutes to upload it. So hopefully in about an hour and a half, 2 hours tops, Adria, we should have this archived for you. Eileen, thank you for that. I will see you tomorrow. I do want to take Fida's, I hope I'm saying your name right, Fida. She says, or he says, Michael, don't understand the momentum triggers and resistance/support triggers. Please help. Sure. So, quick lesson here, crash course for you. I'm going to be adding this to the resource page shortly, guys. But Fida, just for your consideration, we're looking for support and resistance lines in momentum, just as we do in basic price action. So remember, in basic price action, 2 points make a trend line, 3 points confirm it, right? Same thing that you're looking for in momentum. We take basic trend lines here, just as we did in price, right? And what we're looking for are these to be triggers for us, meaning if I'm looking to take short exposure, I want to see a development in price that coincides a break in momentum. Now, one thing I do want to prompt you by saying, Fida, is this. There is nothing, okay, forward-looking about any oscillator, okay? And these triggers in and of themselves mean absolutely nothing unless we see an accompanying break in price action, meaning I see a break of this support trigger and price takes out a session opening range low. Or I see a break below 60 momentum and price takes out a break of the opening range low for the week or a support. Do you know what I mean? And all we're looking for is a graphical representation of a turn in momentum. That's it. Okay? So, Fight, I'll have a lot more on the resource page for you soon. But there's a lot of information in the basic RSI that we can use to our benefit. Another thing we always talk about is in really strong uptrends. If you see here just from last week's low, you find support at 40. You want to see 60 breaks. Support at 40. You want to see 60 breaks. Once 60 starts to hold resistance, now you're looking for a 40 break to suggest the trade is turning over. There it is. Turn ahead of 60, and there's the other 60 break. Now, the fact that we're back above 60 here puts me on the constructive outlook. I'm looking for support at 40. I'm looking for long triggers while above 40. Okay? So, for example, here, FIDA, if the trigger gives out and price tops out the U.S. opening range high, that, for me, would be a trigger on the long side. Does that make sense? It takes a little bit to wrap around your head, and as we go through more examples, I'm sure it'll start to click. But let me know if there's something specific, FIDA, that I can help you with on the trigger strategy, or if there's something that I may have missed. Okay, Adrian says, Mike, I still receive a security warning on my cell phone when trying to use the browser for Chrome. I wonder, does anyone else have the same problem? Guys, are any of you having that? It's actually good that you brought that up, Adrian. Guys, later this week, we will be updating the SSL security certificate for the website. There shouldn't be any problems on your end. If you do get a security alert or a warning like Adrian is getting, your best bet is just to clear your cache, because there's a new SSL certificate for security. You might need to clear your cache for that to actually kick in. We will keep you updated on the members homepage here, guys. So when we do make that update, you will see it here under the announcements. But just keep in mind, if you do get an error or a security alert of some sort, just go ahead and clear your cache for that browser, and it should resolve the issue. Has anyone been getting any issues using mobile devices on SB Trade Desk besides Adrius? Adrian says, maybe that is it, the SSL, because another site I go to does not have the security certificate warning I received from SB. So yeah, we're a secured site, Adrius. You're not going to see that issue unless you're going into another secured site. But Jay Jackson saying no problems on iPad. And yeah, I haven't had any issues. I've tested it on Android and multiple devices. So Adrius, it might be an isolated issue here. But guys, info@sbtradedesk.com. Anytime you have any feedback for us, whether it's problems with the site, ideas you might have, what you like, what you don't like, we greatly appreciate and encourage your feedback as we continue to build out the service. So please feel free. It's an open door communication with us and you. We want to hear from you guys. FIDA says, thanks. We'll wait for the resource page. Thanks a lot. All right. And it takes a little bit to get your head around it, FIDA. So just, keep in mind, we do these webinars every morning, Tuesday, Wednesdays, and Thursdays. Obviously, yesterday I was still off, so we didn't have one. But I'm sure as we go through the week, FIDA will start to click a lot more. Feel free to ask any questions through these webinars. That's what we're here for. So if that is it, we're going to go ahead and wrap it up here. Again, heading into the end of the session, you're pretty light until you get into the Fed minutes at 2 p.m. Eastern. Look, we already know where their stance is. It's going to be the devil's in the details. Again, FOMC minutes is not a release like NFPs, guys, or GDP or CPI, where you get the release, the market reacts better, worse than expected, how far off the deviation, you trade from there. The minutes, the devil's in the details. I hate using cliches, but we really need to see whether, well, the tell will be whether the majority of them are still leaning towards a much more cautionary stance to wait to move rates, or if the data was compelling enough to start warranting a little bit more of a bullish approach, or not a bullish approach, a hawkish approach. Personally, my humble opinion, I don't necessarily think you get all that play from this specific release. Remember, there's been some data that's been printing since that this is not going to be covered, right? This is the minutes from last month's FOMC policy meeting. So keep that in mind. And the one thing I'll be looking at every single day as we get through this week is this dollar index chart. And if we do challenge that lower median line parallel, which we have yet to even test since October. Okay, and a downside break from there really solidifies, I think, some of the biases that we're working on, specifically on the pound, on the Aussie, and it'll be interesting to see if the yen actually gives us a little bit of a play on that move as well. One trade we haven't talked about in a couple of days I just want to touch upon real quick is the Euro-Aus. Guys, again, a trade where it has a very compelling monthly opening range above key support. That would be this 38.2 confluence with the 200-day moving average. And, with what we're seeing in the Euro and Aussie, both showing some strength here, not really surprising to see this chop sideways. But I did just want to highlight 148 into 144.80 as a range I'm watching here for the Euro-Aus. Here's what the Euro-Aus looks like on the intraday chart. Okay, there's the week. That looked to me like an initial weekly opening range break. So your bearish sub 146.35. That being said, ever since the low, momentum hold at 40. Momentum hold at 40. And I think you want to be focused heading into today's session on 46.15 into 45.70. We'll wait for a break of this range. If we do see a break here, you're going to look for a test of the opening range low for the week. All right. Also, objectively, it looks like this is a basic tag, okay, of the median line parallel here, which would have us looking higher near term towards this median line. So another interesting pair that might offer some nice plays as we get deeper into the week. All right, guys, we'll wrap it up there. Again, I'll see you bright and early tomorrow morning at 8:30 Eastern for another intraday strategy webinar. Keep in mind, today at 1 p.m. Eastern, Jamie's going to be online with his midweek strategy webinar, so don't miss that at 1 p.m. Till then, best of luck trading, guys, and we will see you tomorrow. Cheers.